stuff.
Okay, let's just start out with a couple definitions if y'all don't know anything about money. We can kind of look at this in level 1, level 2, and level 3. What we all kind of know as level 1 standard money, when you think of money, is commodity currency. So that's going to be money whose values comes from a commodity of which it is made. Commodity money consists of objects having value or use in themselves, intrinsic value, as well as their value in buying goods. So when you think commodity money, usually we're thinking gold or silver. And the reason it's commodity is because it still has a value. Even if it's not used as money, it can still be used to make whatever, jewelry or all sorts of other stuff.
Right.
Conductors.
Yeah.
It still has an inherent value other than being a medium of exchange. And so with commodity currency, the way it's been, at least in the beginning of the United States up until about 1913, it was $1, like one banknote was worth about, what was it, 20, or is 1/20th of an ounce of gold or whatever. So a $20 bill, you go into the bank and you say, I want to exchange my dollar bill, my banknote, I want to exchange that for gold. Yeah. And they are obligated to give you a gold coin, which is worth like $20 or so. So that's traditional Scrooge McDuck money. Right. Now everybody likes a commodity currency. Everybody likes paper money because then you don't have to have a fucking Skyrim bag of gold that you're walking around with, right? Looking like straight up Scrooge. And then so that's what we used to have, but now we've moved to fiat currency. And it's not. I'm not talking about the little Italian car.
Mm-hmm.
I'm
they
talking
are
about,
adorable, though.
Yeah,
in a weird way, kind of.
They're kind of cool.
You can use fiat to buy a fiat.
You can steal one. Yeah,
Ooh.
you can. You can steal a fiat
So meta.
by hand.
You could get it for free, technically.
You ever see those videos of people? It was like just 4 bodybuilders just lift a smart car out and just steal it. No, but fiat currency is a type of currency that's not backed by a commodity such as gold or silver. It is typically designated by the issuing government to be legal tender. Throughout history, fiat money was quite rare until the 20th century, but there were some situations where banks or governments stopped honoring redeemability of demand notes or credit notes, usually temporarily. In modern times, fiat money is generally authorized by government regulation. So I guess
that's just trust us. We're good for it, bro. Like,
right.
It's good. Trust us.
And we all know how that goes,
Not
right?
backed by anything, technically.
It's not really backed by anything other than
your trust.
Backed by the military. And if you don't use our money, well, we'll save that. Yeah, we'll save that for what's to come. If you don't want to use the fiat currency,
The promissory note, I think, isn't that like the technical term? Yeah,
right. Because now, I mean, it used to be that banks used to have. I mean, that's what the Federal Reserve was for. Was where all the gold is, or what's it called? What's it called? Fort Knox or whatever.
Yeah, right.
And all these places where like physical gold was stored. But after a while, the restrictions started getting less and less, so that the government can print money all willy nilly and do all fund illegal wars and all sorts of social programs and pet projects and stuff that they would never be able to do if they had to actually have the gold to back it up.
right.
Because that is the thing. There's a physical limit to the amount of gold in the world.
Well, it's really a genius move if you think about it. They're like, cool, we're no longer on the gold standard, and then we're just gonna like steal all the gold back, and then now we have all that value again. But we'll get into that. We'll get into that.
Yeah.
And then so basically most countries now have fiat currency of some type. That's what we've all basically only experienced that. Even though we don't think of it that way, when you go to the bank, they only have maybe 10% of the actual, like they don't have any gold in most of these banks. Smaller banks, they don't have any gold or silver at all.
Yeah.
They just have bills, but they don't even have enough bills for everybody's, if everybody all pulled out their money out of the bank all at one time. They're only legally they only have to have like 10% or something extremely low based on what it is.
That's why you
like
see those Arma trucks going in and out every week.
Yeah.
And armored bodyguards, all that.
You're only federally insured for up to, I think, $250,000, which seems like a lot. But I mean, if you have $1 million and then 3/4 of it is suddenly gone.
Yeah.
That's not fun.
It's
Not
crazy.
good. Not good.
Okay. So then what we're moving towards now is central bank digital currencies, which are sort of like a cryptocurrency, but without any of the cool things about cryptocurrency and all of the bad stuff about fiat currency. So a central bank digital currency is also called digital fiat currency or digital based money, is a digital currency issued by a central bank rather than by a commercial bank. It's also a liability of the central bank and denominated in the sovereign currency, as is the case with physical banknotes and coins. Rather than a new currency, a CBDC is a form of central bank electronic money that can be used by households and businesses to make payments. A report by the Bank for International Settlements states that although the term central bank digital currency is not well defined, it is envisioned by most to be a new form of central bank money that is different from balances in traditional reserve or settlement accounts.
So just to interject, like you could already digitally send money around, right? So the whole point of this for them is just to consolidate all of that and onto one singular platform they have control over, right?
We're already in
Well,
that.
this is also, to me, it seems like we're going to get into a precedent of the government seizing money. And it seems like if they move to a centralized digital currency, they can continue to produce money without having to physically produce it and have it be a tangible object
Right.
because it's harder to take money away when it's a physical thing. You know, if my dad's like, hey, sport, here's $20, like they're going to have to come physically take it from me.
Right.
But if it's all on a centralized digital currency, it could just be like, boop, you're done.
Something like that. Yeah.
Yeah. And that gets really scary and it gets really into conspiracy zone, and we'll try not to be too doomer about it, but it's also like it's pretty doomy.
It's a little doomy.
It's a little doomy.
I don't know. You give people an inch, right? Like,
Yeah, no, exactly. It's exactly what, they're like, at first it's like, oh, okay, well, we don't need to have as much gold in the bank as we don't need to have 1-to-1 the amount of gold versus the amount of dollars.
Right.
And then it's like, well, actually, we don't even need to have 10% of the amount of dollars. And then it's like, well, actually, we could just print it from wherever. And then actually, well, we don't even have to print it anymore because now it's just on an app that you can, I'm sure, be banned from, right? It's the very dystopian future that we're heading to.
Yeah, it's
unfortunately
particularly concerning, I think, especially the level of security, which I don't actually have any information on. So that's kind of concerning that it hasn't been, more publicized. But anyway, I think that's a discussion for later.
Right.
And then, so just to get this last definition here, we got cryptocurrency. If you don't already know, a cryptocurrency is a digital currency designed to work as a medium of exchange through a computer network that's not reliant on any central authority. That's the big
Ultimate takeaway.
That's the ultimate takeaway is that it's not reliant on central authority, such as government or a bank, to uphold or maintain it. It's a decentralized system for verifying that the parties to a transaction have the money they claim to have, eliminating the need for traditional intermediaries such as banks when funds are being transferred between two entities. So you can see why cryptocurrency represents a threat to the traditional central banking system.
So it's interesting because CBDCs now are being touted in some places as being a cryptocurrency when in fact they are not. So the distinction is very important that we make very early on.
Right. So,
yeah, because what is crypto exchanged through? There's like Ethereum. Like, is that Ethereum is just a type of thing? What's it actually exchanged? Like, what's the rate compared to when it comes to like cryptocurrency? Do you guys know?
Well, so the exchange platforms vary, but essentially Bitcoin relies on the Bitcoin blockchain network, and then Ethereum is like a platform essentially for you to create more blockchains on so that you can customize your own financial platform, basically. Right. Okay. So that's the difference there. But they're all still decentralized. So the point of cryptocurrency is that no single entity has ultimate control because everybody gets to be part of the vetting process on transactional happenings, I guess.
Right.
Yeah.
And this is why a lot of the finance nerds and like the very libertarian free market types are all about cryptocurrency. And it makes sense because it is more, in a way, you might think, oh, cryptocurrency, it's not even real. Like there's no dollar bills involved or there's no physical money to it. But just due to the way that crypto mining works, it is kind of it's sort of a simulation, I guess, of gold. It's more similar to gold than it is to fiat currency.
Right. In a sense, it has well, with Bitcoin in particular, I should say there is limited, amount. So the idea with Bitcoin is that each Bitcoin is increasingly difficult to create, to produce. So the overall time frame gets exponentially longer. So it's going to take something like the next 120 years to mine all the Bitcoin, which I do believe the ultimate capacity is 21 million Bitcoin. So yeah, finite in the same way that gold is just non-accessible,
Right.
or
Right.
beyond
It's like
the limitations
right.
of Earth.
In like back thousands of years ago, I'm sure it was probably a lot easier to mine gold because it hadn't all been stripped from every cave and every tunnel and every river or whatever. You know, even a couple hundred years ago, the actual gold rush, you know, you could just be like, yeah, woo, and you know, you found a little nugget that changes your life in the 1850s or whatever. And then even since then, it's become so much more scarce and hard to find. And it's like, yeah, you could keep looking, but it's just going to get more and more difficult. It's deeper and deeper into the earth. It's harder and harder to actually mine it. So it's sort of like,
hey, people still do look for gold. There's still panners out there.
Oh, there are,
man.
yeah.
Just like as a tangent, there's a YouTube channel out there of a dude who just pans for shit and posts his findings. Anyway,
But I mean, the large scale gold operations are definitely like almost monopolized at this point, which I imagine towards the latter years of cryptocurrency that will also kind of be the case. That's just kind of how it works.
We're
But-
living in an age of digital prospectors. Isn't that interesting? That's a cyberpunk term,
really
you
is.
know?
Except now that there's a higher monetary threshold to become a miner.
Yeah. Well, the funny thing is you said, you know, it's like, well, people will argue like, oh, well, what even is cryptocurrency? Like, it's not even real. But then when you learn about fiat money, you realize that's not even real. Either. It's just like,
It's source, trust me, bro.
it's a social construct. It really is. But it went from, you know, to a degree, it's like, this amount of gold equals this amount of currency. It was an A to B. And then over time, like you mentioned, it's like they got less and less and less to where it's almost now like almost non-existent. It's not backed by
it's a
gold
complete
at all.
abstraction.
It's completely just based off of our system of trust going, we consider this valuable, and as long as we continue to consider it valuable, that's the case. But yeah, cryptocurrency is a libertarian's dream because it's just simply people that are all banding together and just saying, hey, we're just going to consider this thing valuable, trade amongst ourselves, and then more and more and more people join it, and then
Is crypto I mean, it's in the name, but is it encrypted? Like is it hard to get into and see who's doing what transactions with who? That's kind of the point,
Let's
right?
just say, short of owning a quantum computer, it would take you thousands of years to crack a single node of encryption on a blockchain. And by the way, when you create a blockchain, every node of encryption encapsulates the previous node. So you're creating more and more tiers of security for every single piece of information that expands.
That's where the
throughout
term
the
comes from. Yeah.
It's like on Family Guy when he's like, "Oh, Lois isn't home," and so he goes and there's like the vault in the vault in the vault in the vault in the vault. Goes down the ladder into the vault, and it's just like one porno mag, and he's like, "Nice."
No, exactly.
Yes.
Well, that is kind of what it's like. And thank you for describing it for the likes of our audience. And
now I get it more.
Now I get it more.
Makes so much sense.